So thanks everybody for coming in today in our Lunch and Learn for Binary Stream Subscription Billing Suite for Dynamics 365 Business Central. My name is Nick Petrolini. I'm a Partner Success Manager with Binary Stream, and alongside with me is Jerry Taylor, our Solution Consultant who specializes with our Business Central solutions, and we'll be taking you through sort of a hands-on look at how Subscription Billing Suite looks within the Business Central environment. So again, I spent a little time on the history of Binary Stream last week, so I won't get too into this. The only thing I really want to point out here is that these solutions have been around for quite a while. SBS in particular has been around quite a while in the GP space, but since 2017, it's been available for Business Central. A quick summary of what's available for Business Central at this time. I know a lot of you are probably familiar with our solutions in GP at this time. Of course, multi-entity management being the flagship. That's now available for Business Central. And then we have our property lease management on the right, which is currently in development for Business Central and scheduled for release later this year. But the one we'll be focusing on today on the left there is our Subscription Billing Suite. And then a quick rundown of how Subscription Billing Suite is broken down. It's really broken down into three separate modules. The first being that Advanced Revenue and Expense Deferrals module, or ARED for short, which is really designed to help companies with their revenue recognition as well as help with their expense deferrals, to give them a lot more options around how they can set that up automatically within Business Central to automatically recognize that revenue or expense over the time, the deferral time. And then this second module there, Advanced Recurring Contract Billing. And then finally there, the Multi-Element Revenue Allocation module, or MIRA for short. And it's actually included with our Advanced Recurring Contract Billing. But it's a very distinct functionality in that it really helps with that revenue compliance piece with ASC 606 to help with that allocation of revenue amongst your performance obligations or your contract items to make sure that's in compliance. Then we get into some of the targeted industries that we've seen work really well with our Subscription Billing Suite. Some of the most prevalent ones we see there are warehousing and storage and restaurant food businesses, as well as some software telecommunications, of course, with those recurring contracts and monthly contracts or annual contracts that are sometimes paid up front and also need to be deferred over that year. Getting into some of the common pain points we see with some companies within those industries. First and foremost, those that need to comply with those revenue standards that were introduced a few years ago in ASC 606. Alongside of the need to amend contracts mid-term within Business Central, which isn't so straightforward without the ARC-B module. So having to adjust if you need to put a hold on a contract, or you need to set a price escalation or discount, and having that billing schedule be able to auto update and automatically recalculate how those future revenue is going to be collected can be a great time saver for the accounting staff of the users. And then similarly, managing non-standard billing structures, being able to set up pricing based on tiers or flat tiers, as well as usage-based, set min-max limits. Really, the possibilities are quite expansive when it comes to our billing structures that we present with our ARC-B module. And sometimes those really unique billing structures, really tough to manage within native Business Central, and they need to set up some sort of customization or a really extensive configuration package that manages that. So Subscription Billing Suite really gives an opportunity to really simplify that and make it more efficient. And then, of course, just managing the volume of contracts and having non-standard billing terms that might differ amongst a wide variety of your contracts. Being able to handle that in a scalable way can be a major advantage. Forecasting and reporting customer terms, sometimes it's tough to get the information you need out of the system in a manageable way, and without a large need of manual recalculation or manual adjustment of those reports to make sure that they're capturing what you need. And then to the point of managing things outside Business Central, having to have external systems that are calculating your deferral schedules or managing those within spreadsheets that can lead to, just a lot of time wasted and a large opportunity for error, and having to review and go back and correct those. We see those as some major pain points that we've seen. With that, I think I'll pass things over to Jerry.
Okay, thanks, Nick. Now that we have our subscription billing suite embedded into Business Central, what's so great is that, the modules are going to look like any other Business Central module. And we've actually created a couple of roles so that in this case, you can see I'm logged in as an administrator role. What's great about that is I've got that easy access on these menus to all of the setup windows I might need. But we've also created a couple roles for users. So somebody that's maybe working, primarily in the recurring contract billing module will see all of those tasks quite easily, or, likewise, if they're working in the ARED module. So what I've got up here is I've got the ARCB module and our ARED module. And then there's the third module, the Mira module that Nick made mention of, and it's kind of built into our advanced recurring contract billing module. And I'm actually going to start here first. So we'll do a walkthrough and give you the kind of a high level overview of what kind of scenarios, billing scenarios we can create with our ARCB module, just to really streamline that mass invoicing process and create some complex billing scenarios. And then we'll take a look at the revenue recognition and the expense deferral side of things with our ARED module, and then wrap it up today with some of the reports that we've got available out of the box. So if I come into the ARCB menu and the ARCB user list, now there's a lot of items on this list, but you'll notice as I scroll down, a lot of this is batch processing. So right now today, we're going to take a look at kind of a step-by-step field by field process on the contract, but a lot of these processes can be handled in a batch scenario. For example, renewing contracts or updating prices, or going through price adjustments for escalations, or even terminating. Lots of, just to make that simpler so you don't have to do it on a contract by contract basis if you've got clients that have many contracts. So coming into billing schedule list, and this is your sales agreement or the contract with a customer. We call it a billing schedule, and I'll use those terms interchangeably today. So this list page is going to give you that view of all of the active contracts. So you can see the contract number, a description, the customer, start dates and end dates, what the next invoice date is. So quite handy information. And as well on this page, we can also do some imports right directly from here. So if the customer is bringing in data from, maybe it's a CRM, so all of that information begins and the contract starts there, it might be Salesforce or, Microsoft CRM. Those are the most commonly used one, but we've also got a lot of customers that have data coming in from even their proprietary systems. So, that can come in and be populated with, a CSV import or an XML. And then we've built out APIs that are available for your use, building out your customers' integration, so to really automate that process. So I'll come in and we'll take a look at an example contract. Now, one other thing I'll make mention of right off the bat, you'll see this company code field here, is that our multi-entity management product and our subscription billing product are actually integrated and work together. So that's very beneficial for customers who are dealing with multi-companies as well. You can use both products together. But coming here at the contract level, and I'm just going to take a look at the header, some of those kind of high-level fields for the kind of initial overarching parameters of a contract, and then we'll talk about the actual billing lines and those scenarios that are going to be tracked for billing purposes. The first field up here is a billing schedule group. It's almost like a class, just a way of defaulting some certain information onto a contract, either if it's being created manually or if it's being imported, and then there's just less fields to map. But in addition to that, it's a great filter field for reporting or for determining what contracts are going to be invoiced if they need to be invoiced in certain groups. From there, we've got customers. So there's actually 2 customer fields on here. This is the Business Central customer list. So it's integrated directly into the contract billing module. But the reason we have 2 customers is you might have a sell to customer and there might be an end user. So like in our case, we will sell to a partner and a partner turns around and sells to the end customer. And we might want to track that end user so that when your customer happens, if they contact us, we know exactly who they are and how to support them right off the bat. So both of these are a Business Central customer that had been designated. It's just a flag on the customer card that indicates that they can be an end user for this customer. Then the other standard kind of sets of functionality you might expect, what's the start date for the contract? What's the frequency? What's the duration? Is it a year, a 2-year, a 3-year contract? So you can put in your start dates and end dates. Again, you've got multiple options for billing frequency. So how frequent does the invoicing occur? And, we've got those standard settings that you would expect from daily up to annually or even one time. But we've also got an interval field here. So if there's kind of, non-standard invoicing frequencies, such as maybe the customer wants or that client wants to be invoicing every 3 years. If that was the case, we'd select annual, put a 3 in the interval field, and now this contract will track to bill every 3 years. So it can really go from daily up to any frequency that you need to have for the invoicing. Another really great field here is the auto renewal field. What's really powerful about this is when we have it turned on, it's automatically going to renew at the end of a billing period for whatever frequency you need it to renew for. So clients might want to set up to renew kind of indefinitely so that it requires a customer to come back and cancel. Or they might say, well, we actually have a finite period of time and we want to say it's only going to renew for this period of time because after that, we want to come and take a look and determine if there's any price changes, if anything needs to be renegotiated on the contract. So if you leave this off, the contract will not renew as of the last billing period. And it doesn't mean it can't be renewed. It would just be a manual process to renew it, where you have to actually specifically select the contract and put in the renewal information for it. Aligning to month and prorate partial period can be used together. So if we think, a contract can have any start date, you might want to align to month, meaning that billing is going to take place as of the 1st of the current month or the 1st of the next month. And when you do that, you might want to use a prorate partial period. So either that first or last period is going to be prorated based on the number of days. So a lot of options here. There's, a ton of fields for sales reps or external document numbers. Really, as much as you can imagine, you might want to track on the header. And then if there isn't all the fields you need, but there's also 13 additional UDF fields that are available as well. So that's pretty much the header information, pretty straightforward. And then up at the top, we've got a bunch of functions we can do with the contract as a whole. Notice we've got the dimensions. So the dimensions can be brought in from the customer or the item and populated on the contract. And of course, you can add any additional dimensions that you might want to be tracking specific to this contract. But then there's things like, using the contract as a template so you can copy with it, terminating and removing terminations, as well as putting a contract on hold so that billing is on hold for a designated period in time. And then there's options as to what happens when that invoicing re-engages. Escalations are price adjustments based on an agreed upon point in time. It can be an increase adjustment or a decrease adjustment. You can put that in and track it. And then, a lot of other kind of pretty straightforward options such as invoicing and so on. But let's come down and take a look at the lines and what we can achieve for billing scenarios. So there's a lot of different flexibility and functions that can really get quite complex billing scenarios tracked here and manual or automatically invoiced. So starting down here, we can use items. We can set up our item, standard Business Central item, either a physical inventory item or a non-inventoried item or a service item. But we can also add comments here, and those comments will flow through to the invoice as well. And then we can also use resources. If there's resources available, they can be used on this billing schedule and invoiced as well. So once we've got our items, there's a couple of different options. We've got billing types, we've got pricing methods, and then we've also got the start date, end date, and frequency down here at the line level. Now, whatever we put on the header is going to flow down automatically, but you can see here each one of these lines can have its own set of parameters. So these will all track an invoice based on whatever has been assigned here. So you really get a lot of flexibility where you don't have to set up a separate contract for all of the different billing scenarios. You can include them all on one contract for the customer if you need to. Now, that being said, if there was a reason for a customer to have a distinctly separate contract, that's fine. You can have multiple contracts for a customer. And then when it comes to invoicing, you can choose, do I want to send out an individual invoice per contract, or does my customer want one consolidated invoice? And we can do that too. So we talk about the billing types. We have 3 different billing types, and standard just means we already know what the quantity we're going to be billing. It's that fixed amount. Whereas usage says, in this case, I'm going to be populating a quantity either manually or via import. And, maybe it's a consumption-based usage, or it could also be metered, whereas like in the case of utilities, where you're saying at the end of every period, here's what the new amount is. It takes the calculation from the previous amount versus the new amount and bills for that quantity. And that's that metered scenario under usage. And then the last one is milestone. And milestone is, when we have deliverables and we don't know when we're going to bill them yet. So we don't have that end date yet, or we don't have that specific billing dates. And what that means is we can store it on the contract and yet not have to actually pick it up by invoice until a deliverable has been completed. And what that looks like, if I were to add one here, and I've got a milestone item and I select milestone, I could use any one of these billing types for the same item, so you don't have to have multiple items set up for the same type of purpose. When I select milestone, as soon as I tab off the field, I've got this one set up almost like a kit, and this milestone contains these 3 deliverables. If I come over here, you'll notice there's no end date. So now I can track this on the contract, and once a deliverable has been met, put in an end date, and that's going to trigger the invoicing automatically. So once we have that established, then we're going to determine the pricing methods. And there's a few different pricing option methods. So standard is just basic BC functionality. Whatever's already set up on the item is going to flow through here. But if you need to be able to override that and adjust for negotiations where a sales rep can negotiate a price, or each customer could have a different value here, that's flat pricing. You'll put in an amount. Then the tier and the flat tier is based on that quantity tiers, where a tier might be a different price whenever they reach a certain quantity level. So say, for example, 0 to 100 is $10. If they go from between 101 to 200, it's $8.75, and anything over 200 maybe a $6.50. That's your tier pricing is going to pull in here. Whereas the flat tier is where you have that same range, but that price is that fixed price. So no matter what the quantity is in the range, it's that fixed amount. So a lot of flexibility here, in terms of what those scenarios are going to be looking like. And then we also have similar options here, and this is for the line level. So some of those same things we saw up at the top, where you could terminate, put on hold, or escalate. But there's also additional price options where you can get into min maximums. So if there's a minimum billable amount, this might be a great example from a usage scenario. Maybe it's professional services, and the agreement is they have to bill a minimum of 10 hours a month, and the system will track that and populate that on the invoices when a minimum hasn't been met. The same thing occurs with the maximum quantities, and then there's free quantities. So maybe you give away free, a couple free professional services hours every couple of months, so that'll be tracked, shown on the invoice, and you don't have to store that information in an external spreadsheet or something like that. So now that we've got this set up, we can see these are the rules. This is how our billing is going to work, and we can come in here and take a look at what do these billing details actually look like. So this is really great where we're going to have a billing schedule of detail line for the duration of the contract. So this is an annual billing line for 2 years. Therefore, we have 2 lines. So now this information gets stored in the SQL table, so it's available for forecast reporting or MRR reporting, even though we haven't billed anything to the future. We're still sticking with our current month, and we can see this is the sales invoice. If I click on it, it takes me to the Business Central posted sales invoice where we're integrated now. And when I come back, this line now says it's been billed. So it tags it as a historical status, so it's never going to be inadvertently billed again in error. I can see here my next invoice date. So that's really useful information here. You can see what's happening next. And the same thing might occur in professional services where I've got all these billing detail lines, but now in this case, I've got 12 lines because I've got this occurring as a quarterly billing over a couple of years. And I can see that here's my next invoice dates is based on that quarterly assumption. But notice here, I've got different unit prices. So as of the end of a quarter, I've got another price. And then again, at the next quarter, I've got another price. Well, I didn't establish that on this main line here. I've said, here's my price. It's $175 for a quantity is 75. But in this particular case, I've used the escalation functionality. And so in the escalation functionality, I said, based on this start date, I want to increase the price. And actually, this is not the one that's flowed through. This should be set to quarterly. I'm going to increase that price based on a percentage, and that the system is going to track it. So once again, you don't have to store that in an external spreadsheet and figure out when you need to go in and change the price and adjust it. It's going to track that for you and have that happen automatically. So there you'll see all your billing detail lines, just like this hardware line is a one-time billing frequency. So as you might expect, there's only one single line on my billing details. It's already been invoiced, so it will not bill again. So once we get all of those different billing scenarios set up, and there's some additional options down on this line where we can auto renew at the individual line level, or have that auto renew flow down, but you don't have to have that occurring across the board. And once we have all of that, then we can get into looking at how do we do the invoicing? How do we automate and really streamline that invoicing process to make that a lot simpler, at whatever billing frequency needs to occur. And so we've got this invoice creator process where it's like a batch processing. And when I come in here, the most important field here is the as of date. This is going to determine which lines on which contract are going to be brought in here from an invoicing standpoint. So if I were to go and say, well, I want to make sure everything's been billed, and I'm going to go back to a prior month. And this is how you can see how once it's been invoiced, it's not going to come in and be inadvertently invoiced in duplicate. So when I put in this date, these lines are blank. That means I've already invoiced everything. And sometimes you might do that at the just based on the previous month, just to make sure nothing has snuck in or no adjustments have been made that haven't yet been captured on an invoice. So let's just put in, say, June 30th. Now the system goes out, looks at every single contract, every line on a contract that should have been billed based on this date and have not been yet, and it'll populate it here. So that's the as of date for determining what we'll invoice. Then we have the sales document date. This is going to be the date of the invoice. So it could be the same as the as of date, or it could be another date. Maybe you bill in advance, or maybe you bill in arrears, and that's possible here too. And then some options. I mentioned we can consolidate by customer, so you can have a single invoice for a customer with multiple contracts. You can have, if they have the same items, you could also consolidate the lines into that single line for that one item. And then we can also create either invoices or orders. That's set up at the contract level to determine what's going to be generated. So maybe there's physical inventory items that need to be picked, packed, and shipped. So you want to be able to create the order for that to complete that process on the warehousing side of things. But once this is done and we've said, okay, these are all of the lines, this makes sense. I could filter it by that billing schedule group, like I mentioned, or I could bill for a certain customer. But once I have all my filters done, then I've got an option to create the invoices. So this is where standard Business Central functionality is going to take over. This is kind of the handoff between our ArcB module and Business Central, where you're going to just create an unposted sales invoice, or you can create and post the sales invoice, or you could create, post, and send based on, whatever contact information is already set up on that customer card. So now it really takes that, if there's thousands of lines or hundreds of contracts, it really streamlines that process at month end and makes it very simple to create those invoices. So once we've got that done, I want to talk now about not just revenue recognition, but we'll start with revenue recognition, because once we create our invoice, or maybe even before that, there's a couple of different methods for revenue recognition. The first one is going to be kind of that instant recognition. You create the sales invoice, for example, this one-time charge, it's going to recognize revenue immediately. But you can see here we've got like an annual and a quarterly billing, where we're going to send the invoice to the customer. They're paying us up front, so we might want to, we're going to be deferring that revenue. So that would be the second method. I'll also make just a quick mention, we've also got an unbilled revenue option. So if you're not ready to invoice the customer and it's meant to be a separate process, but you want to identify that revenue or that information on the balance sheet, you can set up an unbilled revenue entry, which is just a journal entry that'll start tracking that. And then the invoicing to the customer becomes a secondary process. But we're going to talk about the deferral side of things. So this case, I've got annual and quarterly, and we can start that right here on the contract, where we've got the link to determine how those deferrals are going to work. So for each one of those lines that I know I'm going to be deferring revenue, I can set this as a deferral item and put in different defaults for the deferral account. What's going to be the recognition account when I'm ready to recognize? And then we have the selection for what's the schedule type? What is that calculation method going to be? Is it going to be straight line? Is it going to be event based? So it could be event or percentage of completion. And then we set up here, do we want to base it on a template that says it's going to be X number of months, that deferral schedule? And then we can even override start dates. If we did, for some reason, if we did not want the deferrals to be aligned to our billing schedule, we can change our start dates as well. So once this is done, then we can go into and see what happens when a transaction is posted. So whether it's a revenue deferral or an expense deferral, or even based on a GL account, it's going to be the posting of one of those types of transactions that's going to trigger the creation of a deferral schedule with that information on it. So if I come into our deferral schedules, most of what I've got listed here are based on sales invoices, but you can see I've got some purchase invoices and a general journal as well. And so now if we come in and take a look at one of these deferral schedules, and I'll just grab this one here and make that a little bit bigger. So what we've got up at the header is the indication, what type of deferral schedule is this? It's a straight line. You can also see where this came from. Did it come from a sales invoice? Was it an unbilled revenue journal entry? What's the item? Who's the customer? And you can see those deferral accounts that are coming in here by default. So everything you need to know about where this deferral schedule came from. This link here, if it was from a sales invoice, is going to drill back to the sales invoice we just took a look at. That was the trigger to create this. If it's unbilled revenue, it's going to take me back to the billing schedule. But what's most important here is this detail down here. So this indicates what the terms or the frequencies and the periods for the deferral schedule look like. So all of this information is now set up. It's stored on a SQL table. So now we've got our declining balance and our waterfall report information, but we haven't posted anything to any future periods. We don't have to. It's all of this is stored here. It's available to be recognized based on these dates. And once we do recognize, there's going to be the recognition journal entry number, much like we saw the sales invoice on the contract, where we can drill back to the Business Central transaction that's associated with it. And if we look down here, we'll see the original amount, what's been recognized when we run our recognition, what's remaining is unrecognized, all of this information now available. So no longer having to track this on an Excel spreadsheet, it's all stored here and you'll recognize when you're ready to. But up at the top, I'm going to point out we've also got the dimensions are going to flow through here as well. But we can also make some changes. So we can modify the schedule if we realize that we need to change. Maybe it's not a 1-year deferral, maybe it's a 2-year. But we can also do things like reclassify. If for some reason the GL accounts need to change and we need to take it off of one deferral account and move it and reclassify to another, you can do that with full history there. We can also put holds on the recognition, go ahead and do credit adjustments. So if we think, once we've posted a sales invoice, created a deferral schedule, posted to our deferred revenue account, what happens if there's an adjustment on that sales invoice and we give the customer a credit? Well, that also has to go back and adjust the balance that's in our deferred revenue account, and we'll link that credit note directly to the deferral schedule automatically, and it'll show up here and recalculate the amounts that still need to be recognized. But if we talk about where I mentioned you can make a change to this. So in this case, if I show you this, if I say I want to come along and let's just give a really easy example of an adjustment. Say this is actually meant to be a 2-year schedule. So I can make this change and not have any effect on my GL balance, because all I'm doing is changing what the amounts are going to be for recognition once that occurs. I don't touch anything on the GL, so I can make these changes as I need to. If I had already recognized the first month, it's just going to recalculate from that point forward, as long as, and I've got options. Do I want it to just be a true up? Or if I caught it in time, I could go back and reverse the journal entry. So there's lots of options there for that. So, that's just an example of straight line. Like I mentioned, we could also do event-based. We could do percentage of completion, where on each month we go in and indicate, here's our new percent, here's where we're now at. We've reached this percentage. The system's going to calculate those differences and go ahead and recognize them for us. So that's kind of the recognition side of things. We talked about how it's recognized immediately or it could be deferred. But the last item I want to show you in terms of the recognition is the mirror side of things, that multi-element revenue allocation, where we might have different deliverables where we need to reallocate the revenue and we want the system to track it automatically. And so there's just one setup window that we would take a look at. And that is a standalone selling price. So for every item that could fall under those regulations, ASC 606 or IFRS 15, we're going to come in and say, this is the basis for the standalone selling price. The fair market value for this item is X. So there's options here. It could be based on, a flat amount. It could be based on, and so where we said here, we've got a flat amount that no matter what price is on the invoice, this is our fair market value. Or it could be based on the actual Business Central item itself. Whatever flows through, that's our fair market value. And no matter what price is on the contract, we're going to refer back to this table to find the rules for our standalone selling price. And once we've done that, and I'm just going to come and I've got an example of a contract here. So these lines you see down here, these items are all on that standalone selling price table. And then we've got a contract discount line in here, which, as you might know, there's no discounts when it comes to ASC 606. So we're going to need to capture this and reallocate our revenue accordingly. So in here, I've got contract prices. This is what's going to go on the invoice. This is what the customer is going to see. But now when I come into this revenue allocation window, it's going to show me what's going to happen when I post the transaction, what is going to hit the GL. So here we've got the items, the contract value. This is the total life of the contract. This is what the customer is going to see on their invoices. But over here, we have the standalone selling price. This is what was on that table And if we extend it out for the contract life standalone selling price, these are the values here. Well, that then gets compared against the contract value. And this column here is the reallocation of that revenue to be those appropriate amounts. And notice here, the discount is now gone. It's been rolled in, and all of these amounts have been recalculated according to those regulations, so that when the invoice is posted, maybe revenue is recognized immediately. This will be the amount that hits the GL accounts for each one of those items. If it goes to deferred revenue and we're creating a deferral schedule, this first line here is a great example. A deferral schedule is going to be created for $9,600. Say divide that over the 12 months. That's your amount. It does not create the deferral schedule for the 12,000 because that's not how we're recognizing the revenue. We're recognizing it based on this amount, and this total of all of these amounts adds up to the same thing as what we've got here. So you never are missing anything. There's never any loss of totals there. This will add up according to that standalone selling price table. So now you're in compliance. Those regulatory requirements are met, and the user doesn't have to do anything. So normally, you know, a lot of times clients are recalculating things at month end and reallocating and doing their journal entry. Well, now this does it for you right on the single transaction. A user doesn't have to do anything, really saving time at month end. When it comes to all of the recognition for those deferral schedules, we've got a batch recognition process for the deferral schedules. And that's very much like the invoice creator, where we've got, let me make that bigger for you, where we've got a cutoff date. So if it's June 30th and we're running our recognition, or really whenever you want to be recognizing either revenue or expenses, you'll run this process based on this cutoff date. So now, just like the invoice creator, in this case, is going to go out and look at every single deferral schedule, all the lines on those deferral schedules, like we saw on the straight line, the different months, and only pull in those lines that are within this cutoff date. So once we do that, we can go ahead and click recognize, and what it does is takes those values off of the balance sheet, puts it onto the P&L. So like really in that very straightforward, low time and maintenance process, you're going to be updating all those deferral schedules and really making that month-end process so much easier. So just a last wrap up now, you know, we're getting close to the top of the hour, and I just want to show you some of the reports we have available. So under each module, there's standard, you know, out of the box reports. These are SSRS reports that you can go ahead and modify as you need, because of course our tables are open to you. So never having to worry about that. And so we've got, you know, total schedule value, and in summary and in detail, we've got termination reports, a new sales report, you know, the MRR report, which is always a key ask for us, and then even upcoming contract renewal reports. So even if it's set to auto renew, you might want to have that visibility into which contracts are renewing, or if they're not set to auto renew, give you that sort of fair warning to go reach out to the customer and make sure that that renewal is going to take place. On the ARED side of things, you know, we've got waterfall reports, declining balance report. This is based on revenue, but if you're actually deferring cost of goods sold and discounts, those are available here as well. And I've actually just printed to the screen because it was going to be short on time, just to show you what some of these reports look like. So this would be the MRR report. Great visibility here to see your new sales, upgrades, downgrades, churns, and your ending MRR. And then a chart down here on the bottom, just to give kind of a different viewpoint there. And then we've got a new sales report. So, you know, I might just select a date range, say, show me everything, all my new contracts that have been created within this time frame. So you'll see the customer start and end dates, total contract value, MRR value in that particular time frame. Going on to the ARED side of things, this is the deferred revenue waterfall report. So you can see this both in recognized and unrecognized on a month-by-month basis. And of course, all of these reports can be sent to Excel as well for some additional analysis or pivot table creation. Then we've got declining balance report for each individual schedule that gives you the details of the customer and the particular item for that deferral schedule. And then the last one here is, this one is probably my favorite report. It's a really great audit friendly report. So this would be kind of that balance between, or reconcile between a subledger, meaning the deferral schedules, and the balance in the GL. But what's great about this is that it's a historical asset report. So often when you're going through audit with the auditors, they'll often pick a point in time and say, well, okay, this is great. I can see your details here for the balance, but I want to know what made up that balance as of 4 months ago, last October or February or something like that. And so once you've already run the recognition, when you're doing this manually, it's tough to rebuild those details. So this is going to give us by deferral account, because I've got purchasing and general journals, and then my revenue. It's going to show as of a particular date what was the original amount, what was recognized, and this balance remaining is going to tie into the GL account and your deferral schedule. So you've got all that information, that audit historical as at position for these. Lastly, we also built out an optional package. So we've done a small package of Power BI reports, and these are always really nice to look at. So this is an optional add-on, if you like, where we've got an MRR report, a total billing schedule details. So now you can filter on the fly and change that viewpoint. We got some declining balance, revenue waterfall, unrecognized and recognized revenue, and so on. So for example, in this case where I've got my declining balance, here's my customer. These are all of the deferral schedules for that customer. And so I can go in and filter and really streamline this view here and make those changes, and then be able to drill back to the details that made this up. So, I can see that this is my deferral schedule. Then we're going to see what the actual item is. That's not drilling down. There we go. The invoice that's related to it, and then that graph at the top. So that's kind of, a really, there's so much functionality here, and really tough to cover, in great detail and within a half an hour, but that's like a good high level overview to get an understanding of the functionality and how it works and how that actually looks inside of Business Central.